Ladies and gentlemen, welcome back to the Crypto News Podcast. It's your host, Matt Zahab. We are buzzing as always. Folks, what a couple weeks of crypto it's been. We've seen a whole lot of ups, a couple downs. We've seen sort of the big 3, 4, 5 make a couple big moves. ETH, ETF popping off. Trump and the right-wing party getting a little horned up for Bitcoin and, in crypto as a whole. We love to see it. Next couple months are going to be absolute banana land. It's going to be wild, and I can't wait to get into it. And we have an incredible guest on the show today who is going to jump in and talk about everything liquid staking, DeFi, ETH, ETF related, you name it, we're going to jump into it. Super pumped to have the one and only Evan Weiss on the show today, Chief Operating Officer at Alluvial. He is a true seasoned expert in the crypto industry. Before Alluvial, he served as head of BD for Coinbase Cloud at, of course, the one and only Coinbase. Prior to this, he was the head of operations at Bison Trails, where he successfully managed sales, business ops, and customer success teams. And under Evan's leadership, these teams have built the largest staking provider in the industry, overseeing assets staked totaling over 30 billion. That is absolutely wild. Also, he is the founder of Proof of Stake Alliance, also known as POSA. Long bio. If I read it all, we'd be here for a hot minute. Evan, pumped to have you on, my friend. Welcome to the show. How you doing on this lovely morning?
Doing great, man. Appreciate it for having me on, Matt, and excited to chat.
Pumped to have you on as well. Evan, crazy couple weeks. Again, we are recording on end of July, and this episode is going to air in early August on Thursday, August 1st. ETH ETF has been the hottest news over the last couple of weeks. Massive news. Has been, I would say, a pretty good success. Obviously not the type of inflows that the Bitcoin ETF saw. Again, different assets, obviously same class in crypto. One is more digital gold, one is more digital gas. I feel like the whole digital gas is a little bit harder for people to understand, but still billions of dollars in inflows and really bringing Ethereum front and center in front of not just retail, but institutions as well. I personally love it. You are way more in the weeds than myself, Evan. What's your whole take on the Ethereum ETF? What are sort of some of the long-term implications or network effects? And do you think it's been a success so far?
Yeah, I mean, this has been years in the making. So yeah. I think just to be able to celebrate a huge win for the industry, and a lot of work went into this, asset issuers, engaging with regulators, some of the work, we saw Grayscale do with the Bitcoin ETF and really kind of putting some pressure and the political tailwinds changing, as of 2 months ago, I think no one thought this was going to happen. And so just take a second to celebrate and what is, I think, a monstrous moment for the entire industry, especially the Ethereum ecosystem. So I think from a success perspective, I think inflows are generally what people were expecting to see, somewhere, kind of in the range of where Ethereum market cap ranges up to Bitcoin's market cap. But this is just the start, is my feeling. You now have asset managers like BlackRock and Fidelity bringing this to their clients. We've seen over $1 billion in trading volume on day one. And I think as we continue to progress in this cycle and we start seeing some really exciting use cases built on top of Ethereum, that, digital oil, this productive asset that generates returns, I think is going to be something that Wall Street can really start to wrap their heads around, and what I believe will be a major part of the next adoption cycle.
I agree. You and I are in the same yacht here. One of the things that I've been asked, and I honestly have relatively no clue, and people should be asking you this, not me, but I've been getting questions like, yo, are the institutions going to start doing staking, or are they going to open up some type of staking derivatives, products, liquid staking like you guys do, you name it? Is there going to be anything staking related in regards to the Ethereum ETFs? Because, if they could offer like a little yield back to their holders, I mean, that's pretty enticing. That's pretty sexy.
Yeah, I mean, I think if you look at the products today, they're just not that competitive. I mean, I would personally hold my ETH somewhere where I can stake it and earn my 3.5% to 4%, right? I think we saw the Bitcoin ETFs when they rolled out, people are dropping basis points, 5, 10 basis points. Yeah. Now you're leaving 400 basis points on the table. This will eventually happen. And it is happening. We have staked ETPs and ETNs in Europe. Right in Canada with you've got staked ETFs with 3iQ and Purpose. And so it's only a matter of time. Obviously, the US hasn't had the most welcoming regulatory regime under Gary Gensler. I think that's kind of one of the things that I expect to change over the next, course of the next few months and into next year. But in my opinion, it's only a matter of time. These products are going to be really interesting once they start being total return products and the yields can get passed back to end investors. And so I think that's a big part of what we're doing at Alluvial and done with the Liquid Collective is trying to work with those asset issuers, help them think through how they'll bring these products to market, how they can do it in the most secure way possible. But, my expectation is like 2025, you'll see some staked ETFs in the US.
Oh, it's going to be so much fun. That's going to be a lot of fun. You just teed it off here. Let's jump right into Alluvial and Liquid Collective. I'll throw the ball over to your court. If you could give a quick sort of elevator pitch on the two companies / organizations / entities, what exactly you guys do, how you're sort of best in class on anything enterprise grade / liquid staking. And if you could, give us how those two work together, but at the same time are differentiated.
Yeah, perfect. So Alluvial is a software development company. We are really focused on building like enterprise grade and really innovative staking products with a focus on really supporting large enterprise and institutions. So less direct consumer, more about supporting businesses as they build staking products for end consumers. Liquid Collective is a protocol that is really focused on institutional grade liquid staking. The idea is there had been a lot of kind of crypto native products out in the market, but Liquid Collective tries to bring really like compliance, security, as well as a very commercially friendly model to make it so that these platforms, like I talked about before, can help integrate this into their products and distribute it to end users. And just a little bit of context on how this whole thing came about. Like you said before, I worked at a company called Bison Trails. Prior to this, a bunch of the people at Alluvial have actually been working the staking space for a long time. So whether it was at companies like Bison Trails or Figment or Blockdaemon, it's kind of become a group of people that have really focused on building over the past 5 or 6 years. And a lot of the learnings we had at those companies was distribution. If you look at Bison Trails, you said 30 billion assets on platform. Most of that came from large crypto exchanges, custodians, and wallets. So the idea with the Liquid Collective was we're going to be a B2B2C product. We're going to build this product so that large enterprises, whether that's a crypto exchange, an asset manager, can integrate this into their solution and be able to bring a really great and liquid and scalable product to their end users.
I love it. We got to take a step back here. Liquid staking, you've said it a couple of times. I've mentioned it. We got to take a quick sort of just refresher. What is liquid staking? How does it differ from traditional staking? And, why are institutions and I guess high net worth individuals, I guess even the average Joe, why is everyone so horny to get into this?
Love it. So, traditional staking, right? Bitcoin mining, proof of work, you utilize compute and electricity to kind of verify the network. With proof of stake, now you can utilize your own assets. And so what you technically do is you put them up, you bond them to the blockchain, almost like think of them locked as collateral. They're there, they're stuck, and they're usually based off some protocol rules. You can get them back after a certain amount of days. Some blockchains up to 30, some low as 3 to 4, but those assets are locked and they're capital inefficient. And so that was really the first iteration of staking was, hey, I've got these assets. I want to help secure this blockchain. And yep, I get to earn some nice staking rewards on top of that for, participating in the security of the blockchain. And then in 2020, we started to see kind of a next iteration of staking, which was, hey, it kind of sucks when my assets are locked up, right? I can't sell them. I can't post them as collateral. They're not very flexible. And so what we saw was the development of a new technology called liquid staking. And the idea was you would use a smart contract to pretty much batch ETH into 32 increments, stake it to the blockchain, similar to what you would do traditionally, but you would issue what we call a representation token back to the staker as a representation of their staked asset. Now, that representation on the Ethereum blockchain is an ERC20 token.
Yep.
It can be used, can be sent anywhere. And so, when I was at Bison Trails, this was oh man, that's a better product, right? Wouldn't I much rather stake and also have the optionality of liquidity without having to think about unbonding periods? And so it's really just been an evolution of technology, which I always think is a cool thing of, people just kind of thinking about fun ways to innovate and make things more, better for consumers. And what we're seeing now, just to talk through a few use cases, is a couple different things, which is, retail users will just like it because they don't have to think about unbonding. We did a survey previously last year where, if you stake and your assets are locked up, you're about 93% less likely to stake. Whereas if you have liquidity, now I don't need to think about when I need to sell.
That's a good point.
What we're seeing in the more institutional or DeFi space is I can now post this as collateral. I post ETH as collateral. I don't earn yield on that ETH. But if I'm posting my LS ETH or my liquid staking token as collateral, now I'm earning yield on that collateralized ETH and increasing my total returns. And then what we're seeing in the asset management market, which we're really excited about, is today we have some live ETFs, as we spoke about, or ETPs, and they're really interested in these products today. They stake about 50% of the funds, and that's mostly because they offer daily redemptions, right? So think about it. You got this 6-day unbonding period on Ethereum roughly, but your customers can come back and get their funds on a daily basis. So if all your assets are staked, you can't process those redemptions. And so how the asset managers are thinking about it is, well, let me just hold liquid staking tokens, LSE, inside this fund. And then as my customers come and ask for redemptions, I can just sell the liquid staking token and process my customers' redemptions. And so we're starting to get closer to a world where we're going to start to see like these funds being staked at much higher percentages, which is actually, much better for end users and investors who now get to share in the full amount of the staking rewards.
So just to make sure we're on the same page here, in the same yacht, traditional staking, more of a shit show, longer period to get your money back and slightly higher yields. Liquid staking at Alluvial and other liquid staking boutiques, if you will, slightly lesser yield. However, it's liquid. You could take it out at any time.
So the staking rewards or yield should be the same as you're using a staking product or like liquid collectives LSE.
Gotcha.
Because you think about it, all of that are staked either way. It's really just that increase in flexibility and liquidity and capital efficiency that the liquid staking token offers you.
So why would someone like me, who candidly is regular staking and not liquid staking, clown show move, we'll cross that bridge and we'll cross that bridge later.
We can talk about that.
Yeah. Why wouldn't I just go liquid staking if I can be more liquid with the same yield?
I think, it's just a matter of kind of getting this more to the traditional consumers. So if you actually look at the stake ETH market, about 45% of stake is now liquid staking. But this is more crypto native. This is more, people that are very familiar with self-custody wallets and know how to really interact in DeFi. But my expectation is over time, if you look at the pros and cons of these products, like most people are just going to opt to participate in liquid staking because I've got all the flexibility in the world. And
why not?
I additionally have the ability to use it as collateral or post it in DeFi or earn additional rewards on it. So it's really just a better product and a big part of kind of what we're building with the growth story we see with the Liquid Collective.
Yeah, well said there. It's funny to chirping myself on the pod. And it literally though,
we'll get you some LSEs, man. Don't worry.
I don't need it though. Like my ETH that I have, it's my staked ETH currently is I don't want to say rainy day bag. Not a good term, but it's just like it's just something that compounds and then I just let chill. It's not like, oh, I need this to pay bills or clients or contractors, whatever the case may be. Very interesting. Folks, got to take a quick break. Evan is on an absolute heater right now. We're going to cool him off for 30 seconds, quick ad read, and then we're going to jump right back in and continue on everything liquid staking, ETH, and all that good stuff related. Until then, huge shout out to Prime XBT, longtime friends of CryptoNews.com and longtime sponsors of the Crypto News Pod. We love Prime XBT as they offer a robust trading system for both beginners and professional traders. It doesn't matter if you're a rookie or a vet. You can easily design and customize your layouts and widgets to best fit your trading style. Prime XBT is also running an exclusive promo for listeners of the Crypto News Pod. Use the promo code CryptoNews50, that is CryptoNews50, all one word, to take advantage of this offer and receive 50% of your deposit credited to your trading account. Again, that is CryptoNews50 to receive 50% of your deposit credited to your trading account. Now back to the show with Evan. You're on a heater here, my friend. That was a world-class description of liquid staking. I feel like there's three sort of staking words. You have staking, liquid staking, and restaking. The last one we have not covered. Before we get into some more nitty-gritty stuff, what exactly is restaking for the listeners here?
Yeah, restaking is a newer technology we've really seen come out with the development of a protocol called Eigenlayer. Now we have some competitors in the market that are really building, but the idea was, most protocols, like think about if you're an L2, if you're a sequencer, if you're building something, what you used to do is go out and get a bunch of validators. And so at Bison Trails, we supported about 60 different blockchains. Things like Fellow, which was kind of a mobile first protocol. And what ended up happening was they would have to go out and find all these validators. They would have to pay them inflation or emissions to help secure the blockchain. And so what some really smart crypto researchers thought about was like, once if we could use the power of the security of the Ethereum blockchain to actually secure these protocols up top. And the idea would be, now I don't have to go out and bootstrap a whole node operator set. I don't have to pay really high inflation. I can kind of rely on the security of the Ethereum blockchain and really focus on my core capabilities, which is building this blockchain, building this protocol. I'm not thinking about all the necessity, the details of trying to spin up node operations and work with validators. And so there's called AVSs, and we've seen some really exciting projects launching on top of things like Eigenlayer. And the nice thing with restaking is now if you have ETH, I can restake my ETH and I earn my staking rewards, like we've talked about, that yield right there. But also I can also earn additional rewards or yield from those different ABSs. And so it's a way to really kind of continue to increase your, helping secure blockchains, but also increasing, the yield you can earn on your Ethereum.
Wow. Okay. I need to, and I'm speaking on behalf of the listeners here too. I got some work to do. I need to level up my, I got to do a quick little compliance check on myself and get my staking ducks in a row here. So many opportunities that I feel like I'm missing out on.
Yeah. And I mean, Eigenlayer is now the second. I mean, if you look at staking and just from like a DeFi adoption perspective, Lido is the largest protocol in the world with about 30 billion staked, maybe a little bit more than that today. Eigenlayer now, restaking is the second largest protocol in the world. We've got about 15 billion. And so if you think about just adoption in the market, like staking today really is the most utilized way of actually participating with your ETH in DeFi.
It's true. My issue is like not most, but like of what I think needs to be tied up is already tied up. Then it's a matter of, do I leave Eigenlayer and do I go to Lido? Do I, it's like where to go? That's the issue. What to stake? Is it worth jumping for a couple extra ticks to then lose out on some of the alpha you have? And a little segue to this, Evan, and this is one of probably the area that baffles my sort of Web2 friends and family the most, is when we start talking or they ask me and I say, you can literally very easily get 8% almost anywhere, minimum, we'll call it 4 or 5 with not too long payback periods. And depending on the currency, you can get, I would say 90 plus legit, 20 plus ticks, right? Which is like 90+% legit is in chance of not getting rug pulled or it being very legitimate. You get 20 plus ticks APY per year, like annual interest, which is wild. Is there still that too good to be true, too many rugs, too many scams narrative? Is that why the normies haven't really fully embraced staking? Because man, if you go good savings account, like you're getting what, maximum 2%? You can go with a bond and get maybe 4 or 5, but it's going to take you 10 years to get it back. Like people are unaware that you can literally get 8 almost anywhere per annum like this.
Yeah, I think it's a little bit of a mix of like, some of these things as you get higher up in the yields definitely increase your risk tolerance, right? And most people, you've been holding your Ethereum for a long time. You're really focused on like ETH returns over the next 10 years. I think that's one piece of it as we get into like restaking. It's still a really new product, it really hasn't been tested at scale. How flashing works is still a TBD. And so I think some people are kind of just saying, hey, like I don't want to lose my risk at my Ethereum. This is where I think I'm going to get my next 10x from just holding the ETH. And then the second thing I think is a little bit of an access problem. Is just like, it's a little confusing for normal people. And that's a 100%. Big part of where our strategy is like, I think people like Coinbase and Kraken brought tons of people into staking. Normal people like my parents, my friends, where they could just click a button and stake. And I think that is kind of what we'll start to see with restaking as more of these centralized players just make it super easy. They help filter really good things for you and kind of just make it so that, as a normal user, I can get on my app and just kind of click a few buttons and boom, I'm not having to use a self-custodial wallet. I'm not having to jump through 4 or 5 hoops. But, if we look at the staking data, Matt, like 0.00001% of ETH has been slashed. I mean, that's the data we have. That's the data we talk to regulators about. Like that 4% we're talking about is about as risk-free as you can get given what we've seen in the data. And so that is something that I think that will close over time. We have someone on our team that has a very long TradFi background. And he jokes that, people will jump over each other for 2 basis points, right? They'll step on their mother for 2 basis points. Like we're talking about 400 basis points here that I think people are going to wake up to, especially TradFi, and they're not going to let that sit. And so that's a big part of the momentum we're building on is how do we build products that can really be compliant, that can pass the highest level of security diligence with these very large financial institutions and help bring that large amounts of institutional capital into the Ethereum ecosystem.
Ev, I know you can't tell me everything, but you guys obviously have a shitload of very important conversations with very important players in the space. How much has their narrative and sentiment changed in regards to not only liquid staking and the products that you guys offer at Alluvial, but the sort of whole DeFi industry and crypto/Web3 industry as a whole? How could you say, and I know you can't tell us everything because a lot of these conversations, I'm sure, are very confidential, but of what you can tell us, how has their sentiment changed over the last perhaps months, years? How has that became different?
Yeah, I mean, I think if you talk to the folks that are at these large FIs that are built, like they're obviously believers in this technology.
Yeah, yeah.
A lot of these folks have, had very long established TradFi careers where they see this new asset class and they say, look at the developer mind share, look at the intellectual the intellectual talent that's in this industry.
Yeah.
Like this is the future. I think people were very cautious with way that the regulatory environment was shaping up here in the US, at least previously. As of 6 months ago, I think people were really excited about products that they could bring to market. I think they were less certain that they would actually be able to get through their compliance teams, get through the checks and balances they had internally at these large mammoths where, staking or digital assets is even just a very small part. I have felt a shift though. And I think it did shift a little bit with the Ethereum ETFs, where I think most people expected, moving into April, like people were like, oh, there's no way this thing's going to get approved. There hadn't been a lot of dialogue from what we had heard. And then political wind started shifting. Donald Trump starts to say, I'm pro crypto. There starts to be a lot of pressure on the Hill. We start seeing things like, some of the congressional bills being passed for the first time ever. We've had specific digital asset bills passed in the United States Congress. And I think that has been a little bit of momentum and excitement for the folks at these larger, more sophisticated, traditional players, because I think they've just been blocked on kind of where the regulatory environment is. I think they like things like staking, they believe in the products, they look at the data, they see the ways that their customers can use this and interact with it. And so my experience has been, I think the regulatory environment is going to be a biggest blocker for us when it comes to like green institutions, because I think these large, players understand this is a big business for them. I mean, BlackRock's ETFs have been the most successful ETFs launched to date, I believe, on the Bitcoin side. Like that is something that you have to pay attention to as a business. And I expect that, crypto is just becoming more of a political, hopefully bipartisan political issue. And with that, we'll have regulatory certainty coming through whether Congress or a new change in regime at the SEC. But, I'd say hold on to your seats if that happens, because I think these big players are kind of itching to get in and start innovating a little bit.
Yeah, well said there. We are getting a little tight for time. A couple more questions and we will wrap up here, my friend. Let's jump into the future for a quick hot minute here. What does the future of DeFi look like? The future of ETH ecosystem, the future of sort of staking, liquid staking, restaking? Any hot takes you'd love to jump into that? The whole, ETH being labeled as a security. Now there's Solana being labeled as a security. Any hot takes or future visions that you have that may or may not play out over the next couple months, years, so on and so forth?
Yeah, I mean, I think to what we were talking about earlier, like I think it's going to become access. Like I think with things like, I don't know if you heard about Coinbase smart contract wallet, people managing seed phrases. Like, I don't know how many friends you've onboarded. I onboarded a bunch of friends into
it's a shit show. It's a nightmare fuel. Like, hey, dude, grab a piece of paper. You're going to have to write down 12, 24 words. What the? No.
With things like these smart wallets where, it's all through, pass keys and it's just all through biometrics. You don't have to think about anything. You just open your app, you buy things with a credit card, you press a few buttons and boom, you're lending, you're earning interest on your ETH. You're doing it in a way through, these like mainstream platforms. That to me is the future. I think we're at the precipice of like user experience improvements with L2s and with like UX around wallets. And that's kind of the thing that I'm most excited for is like, how do we bring this stuff mainstream? And I think with products like we're building that we can, satisfy very large enterprises, compliance and security requirements, and some of this new technology improvements, like that's the thing that I think like getting mainstream users to be able to participate in DeFi, to be able to take advantage of some of those 8% yield opportunities that are pretty battle tested. That's the thing that I think is exciting to look out for in the next few years.
Yeah, you and I are in the same boat here. One thing that I often think about, and I would hate for this to happen to our, I don't want to say Coinbases because again, they're already so big, but maybe some of the smaller centralized exchanges or smaller players in the space that are still massive within our space, but I mean small in a sense of the whole TradFi or just financial market as a whole. Like, again, I'll use Canadian banks for an example, sort of your big four, big five. What happens if, Toronto Dominion, TD, RBC, Scotia, BMO, or the equivalent in the States, all the big banks you guys have. What happens if they just start offering their own rails and staking systems? Like all the hard work that we did is just going to go right to them. And I don't know if I'm like, oh, well, should I feel bad? Should I be happy because that means more people are being onboarded? I just can't see the banks giving up a piece of the pie when it sort of hits mass adoption. It's something I think about. I don't know. What do you think about that? Like, you think they're just going to come in and hoop us all, or do you think we're still going to reign and it's going to be more partnership driven instead of them just developing their own product lines and stealing a bunch of market share?
I think it's a great question. I've thought about similar, and I think, there's definitely a possibility that could play out either way. Like, my hope is that like the Ethereum and this crypto ecosystem is pretty strong. There are a lot of OG holders that believe in this, what's being done here. They believe in the quality of it, the access points for everybody. Also, the way that these systems are designed, like, anyone can get the rewards off ETH. You don't need to have access to, a bank to do that. Like, anyone can submit up a validator. There's great projects like Rocket Pool that make that easy and in a super decentralized way. And so my hope is that these things live together. I also think that there really are some like first mover advantage dynamics here, where if you can get these things moving, you can build liquidity, you can build access points for them. It becomes harder for incumbents to come in later and say, let me copy paste that and try to just recreate those like network effects. Now, at some of the scale these, players operate at, that definitely could be a possibility. But I think the work that the crypto ecosystem has done, and I think a lot of the folks that even at some of these bigger players, like they believe in what's being built, and I think they want to bring their firms in a way that can to do it in a way that still keeps some of the ethos that's been built into the ecosystem, and part of why these networks were created for censorship resistance and being able anyone to be able to access and to be able to share in the upside of them.
But you mentioned distribution, which is something again, one of the most important parts of business. In the old days, distribution was having a factory, quick and efficient, product to market lines, and of course being able to deliver and having contacts at IRL physical, location stores. Now distribution is social media. But when you talk about finance, it's one of the few industries that doesn't directly correlate to like social media. It's about how many people actually friggin' own bank accounts or financial products. I believe the biggest bank in the States is JP Morgan Chase, or it's got to be Bank of America. But those guys got to have what? There's 400 million people in the States. They got to have 200-300 million people with bank accounts, like billions and billions of dollars, maybe trillions. It's got to be trillions and trillions of dollars. Like, that's a lot of distribution that they could snag just like that. Imagine they stop advertising for the 2% you get in your shitty old savings account. Put in 10 racks and get 2%. Fuck that. Pardon my French. It's like, put in 10 racks, get 8% every year. You're gonna get some people running to the doors. It's gonna be a good parade.
I think the reality is, once a few folks figure out how to make money on this, everyone's gonna start. And there is like, the reality is like our crypto ecosystem today is small compared to mainstream, and I think there's going to be a bridge. I mean, there's definitely questions there of how this all plays out. My hope is that players like us can get the momentum. We're doing things in a very crypto native way, in the sense of like an open protocol that's owned by a bunch of different players, where everyone can kind of come around a standard together. And so you have to be seen, but I generally think like for this space to go to the next level, we've got to find the way to get that distribution to bring in those normal people. Like, it's not going to spread, just through me and you talking to our friends enough.
Exactly.
Like, it needs to go to the next level for us to be able to really build the next level of the internet, to be able to have principles like censorship resistance built into the native layer of it. But I do think there's the strong balance there between like how institutional it becomes and how you keep those core ethos there.
Bingo. And everyone always talks about you need that killer consumer app or product to go mainstream. It's sort of Web 2 did that with Facebook and Insta. I guess it really was Facebook and it wasn't Insta because that was later on. But you need, Web 1 did it with email. Like, you need that one app that's going to make shit go viral. We don't have it. Maybe it's an 8% interest banking account that's done via liquid staking with Alluvial and Liquid Collective with Bank of America and JP Morgan. Who knows? But that could be.
We're getting closer, I'm telling you, with the way the UX and stuff and like L2s and I think my expectation is that like we'll have a breakout app in the next year or two. And I think that is going to be, stablecoins are also like already starting to grow like crazy. Anyone that uses a stablecoin opposed to a bank account's like never again. So
it's the best.
I'm pumped about it. I think you said it's exactly right. Like, we need that breakout mainstream. But I think once people realize that like the yield that is being, like these activities are generating returns for the Ethereum blockchain, and those returns are then shared with stakers. That's the heaven on the staking side, is to really be able to show like these total return, or like that this protocol drives real cash flows for people.
100%. Ev, before we let you go, any news popping off over the next couple of days, weeks, months in regards to Alluvial and Liquid Collective?
We got some super exciting announcements coming this month. So be on the tune. We got some really cool stuff we're doing on from a standards perspective, some really exciting launch partners, and just more growth on our side. So keep tuned, and make sure to check out alluvial.finance, Alluvial Finance on Twitter, and the Liquid Collective on Twitter.
Amazing. And yourself, where can listeners find yourself on Twitter and on socials?
Weiss1 on Twitter.
Bingo. Ev, really appreciate your time, my man. Great episode. Got tons of homework to do. And I know the listeners enjoyed this as well. Really appreciate you coming on, and can't wait for the next one.
Thanks so much for having me, Matt.
Folks, what an episode with Evan Weiss from Alluvial and Liquid Collective, Chief Operating Officer at Alluvial. We discussed everything liquid, staking, ETH, ETF, future of DeFi, and of course the differences between staking, liquid staking, and restaking, ETH ecosystem. You name it, we discussed it. Huge shout out to Evan, the team, for making this happen. If you guys enjoyed this one, and I hope you did, please do subscribe. It would mean the world to my team and I. Speaking of the team, love you guys. Thank you so much for everything. Eustace, you are the man. And back to the listeners, love you guys. Keep on growing those bags and keep on staying healthy, wealthy, and happy. Go touch some grass, and we'll see each other soon. Bye for now.